Hi everyone, welcome back to Be Rich podcast. The part two of the evaluations video. I'm waiting for you guys to give me some feedback. Are you enjoying it? Do you want me to continue doing this kind of evaluation tutorials? Then I'll continue pursuing that and adding more to the series. Or if you guys feel like, yeah, it's great, but I rather do videos like what I'm going to do today, we'll do that and switch over to this. Today, what am I going to talk about? I've got a couple of news items which I thought I'll touch on. And of interest to you and me. So I thought I'd share them with you and see how it goes from there. So the first one which I want to talk about is something called Stable Money. It's a fintech startup which their primary focus is on FDs. And in FDs in India are very popular. While most fintechs are all about flashy high risk investment products, Stable Money takes a different approach by targeting conservative investors like you and me with FDs. India has over 100 trillion rupees, that's $1.2 trillion savings invested in FDs currently, making it them a significant financial instrument for this country. Most people put FDs, we know this. FDs are considered safe, especially up to 5 lakhs, up to $6,000, that is per customer per lender is insured by the government. So that adds an extra safety net, especially if your money is extremely valuable to you and you don't have any other than small savings which have been putting together. Currently, interest rates in FDs in India are as high as 9%, making them very attractive to investors because of the current interest rate cycle, which world over is going on, and the Reserve Bank also following suit. Now you get FDs at 7%. Stable Money was founded by Surabh Jain and Harish Reddy. Their aim was to simplify this whole FD investing process across multiple banks. They wanted to give a platform which was very simple to use and very intuitive, like all our payment apps which we use, like Swiggy. Uh, Sorry, not Swiggy is not a payment app. I would say Google Pay, Phone Pay, any of these payment apps, or any of our product services app, such as Swiggy and Dunzo and Urban Company. An app platform like that, where it's very intuitive. You click on it and you can choose from a variety of banks, the amount you wish to invest, and within a few clicks and in money transfer, your FD is opened. And same way, when you want to close the FD, you can select the FD which you want to close and look at the terms and conditions for the payout and close the FD and credit it back into your account as soon as you want. Since the launch of this platform 20 days back, the platform has claimed to have over 20,000 customers who have invested over 10 crores. It's around $1.2 million in FDs in two of their banks and two non banks listed with them. The company, Surab and Harish, plan to expand it to 10 banks and two non bankings by December and finally integrate over 25 institutions by end of next year. Of course, the competition as always has taken notice of this, and while other platforms are considering launching their own FD products as well, Stable Money believes it has an advantage with a strong focus on FD and partnerships with the bank. That's currently right now. The goal is to become India's largest FD marketplace by offering user-friendly platform, like I said, that allows investors to open FDs with these. Stable Money is free for investors and it earns its commissions from the banks and the non-bankings for each FD sourced on its platform. So, as an investor, you can use the app or the platform and invest FDs. You have no cost to carry, and all the cost is borne by the banks and the non-banks, which are listed with them. Of course, the regulatory landscape, fintechs have to navigate the rules and surrounding distributions with banks and FDs. Despite all these challenges, Stable Monies have seen significant potential in this and has been attracting both retail and high net worth individuals into its FD platform. Stable Money's long term vision includes expanding beyond FDs to offer diverse range of products like debt, mutual funds, bonds, sovereign gold bonds. Of course, then it begs to the question, what's the big deal between this and any other platform? Because your other flashy platforms, which they said, which only offer debt, mutual fund, bonds, and sovereign bonds, they themselves are going to be offering FDs. And this, as an FD platform, is finally going to be offering all that. It pretty much looks like they'll all be offering everything under the sun, which eventually will does happen in most industries and products. So, in conclusion, with Stable Monies, is taking a unique approach. No one has thought of this before, so you have to give them kudos and credit for that. Taking and focusing on something as conservative as FD market, because usually historically opening an FD is a very painful thing to do. You have to go to that branch, you have to have an account in that branch, then you have to do a whole lot of paperwork, and depending on the branch and the bank to open it. Then you have to keep that receipt carefully, and so there are a whole bunch of like finicky things which is there. Of course, most private banks nowadays, if you have an account with them, basically, if you have the account with them, you can transfer the money and open it via their app. So having multiple banks all under one banner, and you can switch from this bank to that bank with ease, does look very attractive and sounds very nice. And it has an option of not only keeping conservative investors, older investors, attracting them, and also new investors like our case of might also his generation might also be interested in taking FDs. If opening an FD was easier, just clicking a couple of buttons on your phone. So it does sound interesting and something to keep an eye on as it grows, to see how it's nurtured and how it grows in India. Second thing which I want to talk about again, which I read another article. This is about Tata Consumer Products and its dynamic CEO Sunil D'Souza. In the middle of the global pandemic which was happening, Sunil took over the helm of Tata Consumer Products in 2020, which follows to be nothing short of but remarkable. He faced a challenging task. He needed to transform Tata Global Beverages, primarily known for tea, and Tata Chemicals, focused on salt, spices, and pulses, into a powerhouse, into a fast moving consumer group, FMCG industry. The transformation they did over the next 3 years is nothing short of a miracle. Tata Consumer Products achieved phenomenal growth with revenue soaring at a compounded annual rate of 13%. That's nearly $1.65 billion dollars, and a profit surging at 38% to over $144 million. Dollars. Unsurprisingly, Tata Consumer shares have more than tripled in value during Sunil's tenure. So, what's the secret behind this remarkable transformation? Many of you have been wondering. But Sunil's mantra is this: just make sure you're not playing for a draw all the time or not to lose. It's a cricket analogy saying go for the win, go for the jugular, as they say. So let's take a dive into this. Sunil recognized that the need to turbocharge innovation and build two essential capabilities. Firstly, his team focused on consumer insights in marketing department to spot upcoming trends and changing habits of consumers. Then they took this and they gave it to their R&D team, which in turn took all these insights from the marketing department, and made tangible products. So it was just not about innovation, it's also the speed at which he was able to deliver this. Tata Consumer product launch skyrocketed from 10 launches in a year ending March 2020 to a whopping 34 in the year March 2023. They're targeting to increase this revenue contribution of the products launched in the previous 3 years to around 4.5%. Agility has always been the key. They brought to dedicated innovative managers, and consolidated their R&D efforts. He also established a rigorous innovation process that involves monthly meetings with key executives across operations and marketing and R&D and innovation. These meetings ensured rapid decision making with no room for politicking and lobbying. As the company grew, standardized processes became vital. We've seen this in many companies. Initially, during the incubation time, everybody's working together. Things that everyone's excited, everyone's contributing, everyone's working toward a common goal. As soon as the numbers start hitting, people want to have their medals put on. People are busy pushing, brown nosing, lobbying. He managed to snub all that out within the company. Then, as they also grew, he made sure processes were standardized, which is also a fantastic thing to see, which a lot of companies fail to do. With his experience in the FMCG sector, in his roles in Hindustan Unilever, Coca-Cola, and PepsiCo, with all his insights which he had became invaluable, and the fast-paced nature of this FMCG industry is also something he's experienced and knows about. So under his leadership, Tata Consumer has cut timeline for product launches from 9 to 13 months to just 6 to 9 months. Overcoming the challenge of iron reacting with moisture and turning black was a remarkable feat of encapsulation technology. This is not one example of Tata Consumer under his leadership as stack. seemingly basic but essential aspects of their product range. What are the notable things? Their R&D spend relatively to net sales remains humble at 0.3 between March 2020 to 2023. This shows that he is not only kept pouring money into R&D, but he's made the investment, every investment count. So always managed to keep 0.3 percentage, which is phenomenal. Now, what happens when an idea product doesn't work? Sunil believes in fostering a culture that encourages taking risks and not penalizing failure. It's about thinking disruptively. If any idea doesn't work, it's not a personal failure, but an opportunity to learn and pivot. And that's a fantastic thing to see in a leader, where he does not punish the team and punish the companies and then take it personally if failure happens. But he says, let's learn from this and see what we can do. I've seen Abdul Kalam famously do this, where he, when the rockets failed, he would take all the blame and let his team be sheltered so they can continue learning and growing. And that's what's finally led to all what we're seeing today, India going to the moon. So leadership like this is something we should really applaud and encourage. And there's an anecdote about him famously where the Tata Gluco Plus, his team launched this, though there was initial doubts if this will be successful at all, but turned out to be a massive success, Tata Gluco Plus. So highlights the importance of taking calculated risks. Of course, innovation is not one size fits all. His philosophy is rooted in data driven decision making and encourages his whole team to push back and challenge assumptions when they have a strong case, which is a very good thing. All of us have biases, all of us have assumptions we make. And these kind of assumptions can lead us down a wrong path or a less profitable path. So it's always good to have this pushback from your team, and as a leader also encouraging that is a wonderful thing. And you've seen this also, one of the reasons why Dhoni was so successful as a captain was this. You see him in his huddles, you see him in between overs talking to everybody and encouraging people like Virat to speak out, and that's what finally even led to Virat becoming the next captain. So, what's the transformation under Sunil D'Souza's leadership is a testament of power of innovation, agility, and a culture that embraces change and learning. So it'll be nice to see this kind of leadership across more Tata companies, so as we as investors can see our investments grow by leaps and bounds. Imagine if every single Tata company in 3 years' time can show this kind of growth and tripling in share value. The next one is continuing with Tata's. I thought we'll talk about Tata Motors and the EV landscape. They have been an automotive legend for nearly 8 decades now, and they've been making waves in passenger electric vehicle market. But here's a twist to their success story that might not be they may not be keen that we are acknowledging. So what's the deal? Tata Motors is currently dominating three-fourths of the passenger electric market in India. A significant part of this year's 10 to 15% comes from the fleet. Customers think like taxi services like Uber and Blue Smart. The driving force behind their fleet success has been the Express T EV sedan. But here's the catch: Tata Motors doesn't want to be labeled as a cab car. They've had this problem with IndyCar. They once were their models like Indica and Indigo have become cab cars. This association negatively impacts their brand and retail sales, of course. Nobody wants to buy a cab car. So they're threading a fine line between capturing this EV fleet market and avoiding this past image. Even Toyota Innova suffered this, where they had to abandon the whole Innova concept because of being labeled as becoming a tourist car. Safari suffered this historically. So for strategic reason, they're focusing on personal cars like Nexon, Tiago, and Tiggo to cater exclusively to retail buyers. The Nexon EV has been a hit, selling over 50,000 units since its debut in 2020, and they held a 77% share in the market for EV passenger for the first half of 2023. But this seems like the fleet marketing is pulling them back, with their Express TV EV is becoming a go-to choice for ride-hailing companies, signing deals with several fleet operators for thousands of units. EV makes sense for fleet operators because they are driven extensively and they help reduce the carbon footprint of the company. Tata Motors' credibility and competitive pricing and rapid delivery has made them the favored choice for fleet operators. However, they're not ready to fully embrace the fleet leader label as they're primarily focused on personal car segment. If a fleet success keeps coming their way, they won't be complaining. But competition is heating up, especially in the premium fleet category, with rivals like MG Motor, India's ZSEV entering the scene, Tata Motors will have to contend with newcomers like Maruti Suzuki also. So there you have it. We have spoken about three interesting articles which I read, which I thought I'll share with you today on Be Rich podcast as you start your morning. So do let me know. Do you want me to do more things like this where I talk about interesting articles and company related news? Would you prefer that? Or should I stick to what I was doing with evaluation and continue that and talk about intrinsic value and go further down that road and do a complete series and wrap that up? Based on your feedback and your inputs, I would move forward. I'm always available on Instagram, like I've always said. So reach out to me on Instagram. If you find it shy to type your comments down on the YouTube channel or cumbersome to type on YouTube comments, you can DM me on Instagram and let me know your views there too. Anyway, thank you for watching Be Rich. Do subscribe to this channel and turn on the bell notification icon as always. And I'll see you in the next one.